All right, welcome, Market Fluidity University members. In this module, we're going to talk about how to keep your losses small, how to keep your losses really tiny as compared to your wins. Because in the beginning, whenever we start to trade, we always look to see that, okay, we have to keep our losses small, we have to keep our winners big. But what ends up happening is our losses become bigger and our wins become smaller. We get more patient with our drawdown, we get more patient with our losses, but we get impatient with our winners, because at the same time, whenever prices are going to go in profits, we always start to think about, oh, should I close now? Price is retracing, I'm in profits, should I put my stops to break even? Should I close the whole thing because I'm not sure if it's going to go in my favor? I'm up 5 pips, I'm up 10 pips, I'm going to close the whole thing. And as you close the whole thing, you just see that price goes exactly to where you thought it's going to go. You know, that's a big problem. That's all psychological issues, and that only happens when you have lack of confidence, right? Now, on the opposite spectrum, when you're going in a drawdown, instead of getting impatient with the drawdown, we get more patient with the drawdown. We're like, oh, okay, it's going in drawdown. Okay, we'll let it run. We'll let it see how far it goes. And like, you know, that impatient scenarios that do happen when you have a drawdown running, that's where you get in the most problem, because most times, the first thing guys do is whenever price approaches a stop loss, they're going to say, hey, you know, just come in. It's more distracting while you're opening the door. Okay, that was Caesar. But anyway, the most thing that happens is whenever price goes in drawdown, a lot of times guys are going to remove the stop loss, right? They're going to remove the stop, and then they're going to start to think, okay, you know what? I'm going to have a mental stop loss. So the moment you have a mental stop loss, that's where things start to go bad. Because having a mental stop loss does not mean you're going to really respect that stop loss, that you're going to really respect that price. Because the mental stop loss means if price is coming down towards your, like, you know, let's say your mental stop loss, which is not physically there, it's just in your head, you're like, you know what, I'm going to hold it a little bit more. And you hold it a little bit more. And then you hold it a little bit more. And then what ends up happening is that your drawdown gets so big that you don't want to accept that loss. Like, let's say, for example, you got a $10,000 account, and your drawdown, let's say you want to close at like, you know, $500, whatever. It gets up to $800, or even it gets up to $1,000. Now the drawdown is big that you don't want to secure a loss at that point, right? So when your drawdown gets to the point where you're like, okay, you know what? I'm going to lose more than I'm planning on losing, or I don't really want to close at this point. That's the problem, because now it's going to continue to go in drawdown. And as it continues to go in drawdown, the numbers get bigger and you don't accept it. And then you blow your account, or you end up losing way more than you expected to lose. So like, you know, that's not a favorable outcome. So what we're going to do is we're going to discuss some psychological issues and some price action issues on how on how I make sure my losses are small. So let's take a look at this iPad scenarios here. So the first thing we're going to talk about is we're going to talk about buying scenarios, right? So for example, let's say you got a candle coming down, we got a bearish candle, we got another bearish candle that comes down, whatever, and then we create some sort of a support. We've also talked about this in other modules as well, but this is where we go a little bit in depth in things, right? So now, this is a 30-minute, let's say this is a 30-minute time frame, and over here, you have your 15-minute time frame. Now, once you got the 30-minute candle closing bullish, this is going to look like something like this on the 15-minute time frame, where the two 15-minute candles close bullish at this point now. Now, when the next 30-minute candle starts, you're thinking to yourself, okay, you know what, I'm going to execute a buy at this point, and I'm expecting the next candle to continue pushing up. So for example, also, let's say you have a, like, you know, $1,000 account, and you're risking, like, you know, your total risk here is, let's say, $50, right? So you take a buy, your stop loss is down over here, you're risking about $50, and you're anticipating price to continue to push up. Now, if I'm looking at this, and if I see that the next candle starts, and if it starts to wick down, if the next candle starts to break the low of the previous 15-minute candle right here, if it starts to break the low, I'm closing 50%. I'm going to close 50%. And the reason I'm going to close 50% is because if it's breaking the low, there's a probability it may finish bearish, right? It may finish bearish. So if I close 50% right over here, and if price hits my stop loss after that, guess how much I'm losing? I'm not losing $50. I'm losing less than $50. Like, let's say whatever, let's say I end up losing like $38 or end up losing like, let's say $40, right? Just because I'm managing my risk, right? And the reason and the way I'm managing my risk is I'm looking at the candle structure. So let me go over this again. So we're only going to talk about the smaller time frame, right? So let's say, for example, you got the 15-minute, or let's say if you're, now there's one question that if I'm trading on the 30-minute time frame, I'm managing my risk on a 15-minute time frame. That's good. If you're trading on the 1-hour time frame, you're managing your risk on the 30-minute time frame. If you're trading on the 4-hour, you're managing on a 1-hour, so on and so forth. You get the idea, right? Now, the idea is, let's say if you're looking for a buy, we first need to understand what does a buy means when you look at price action. When you look at price action, buys basically means where price will create, higher highs and higher lows. There's going to be higher highs and there's going to be higher lows, whatever, right? Like price is just going to move up. This is what a buy is going to be. And we look at the candles. Candles are the same, right? The candles also make higher highs and higher lows. Now, if you're looking at candles in this way and you have a candle that's breaking the low of the previous candle, this means there's a probability that this new candle can continue pushing down, right? So if your stop loss is somewhere right over here, let's say your stop loss is 15 pips away, right? Your stop loss is 15 pips away. If price is breaking below the low, just ask yourself the question, do you want your full stop loss to hit, or do you want a partial stop loss to hit? That's a very important question you need to ask yourself, right? And if we're being honest with ourselves, we want partial stop loss to hit. We want to lose less than what we planned on losing. This is very important, because if your plan to lose is $100 or $200 or whatever the fuck the number is, let's say like $500, and you're losing $500, look at the chart, look at the trade, and ask yourself, how could you have lost less? Where could you have lost less than $500? Where could you have lost less than $100? Never more. Less than 500, less than 100, less than 200. How could you have lost less? Whenever I take a loss, I always take a look at my loss, and I always ask myself, how could I have lost less? Because believe it or not, whatever you think you do is perfect, there's a better way to do it. Whatever you think, like, you've done the best, there's someone out there who's average at your best. Like whatever best you have, someone's out there who is average at your best. So their best is something that you're not giving out. So whenever you're losing less, there's always a way to lose even less than that. Always a way, right? So let's say, for example, we're looking at bearish candles. Let's say we have price coming down, like this, we have price coming down, and the next candle is also forming. We're coming down right over here. And let's say, for example, the next candle now, and you are executing, let's say, a sell right at this point. And the next candle closes bullish, right? The next candle closes bullish. This candle has not broken the previous candle's high, and you're in a sell. What are you going to do at this point? Ask yourself a question. What are you going to do at this point? You're going to close 50%. This way you're going to close 50% because you are not sure whether the next candle will continue to push down like this, or the next candle will continue to push up. We don't know that, right? If it's going to continue to push up or it's going to continue to push down. Because if your stop loss is, let's say, above this candle, or your stop loss is above this candle, and you're managing risk right over here, automatically now you've lost less than what your original loss was. Like, let's say right over here, you were risking $100, right? You're risking $100, you close 50% as the candle closes bullish. Now, if the next candle comes up to your stop loss, maybe you're going to lose $80. Maybe you're going to lose $70. But the whole idea is to lose less than what you're planned on losing, right? So this is where, like, so there are two scenarios that you can look at where you can say that, okay, you know what, how am I going to lose less than anticipated. There are two scenarios. One scenario is where, okay, so let's take a look at the buys here now, is where, let's say you got a candle closing bullish, right? And the next candle, you're anticipating it to continue to push up, right? There are two scenarios. I'm going to talk about the first scenario. First scenario is when the next candle closes bearish. Your stop loss is right over here. If the next candle has closed bearish, closing 50%. Because if a candle is closing against your direction, if the candle is closing against your bias, there's a probability the next candle can continue to push down. There's a probability like that. You know, so the first sign of risk right here, I'm closing 50%. I'm not waiting around. I'm going to close 50%. The next scenario is where, let's say you have a candle that goes up, whatever, and you've executed a buy over here. And if the next candle starts to break the low of the previous candle, it hasn't closed, it's just breaking the low. If it starts to break the low of the previous candle and you're in a buy, I'm closing 50%, 25% to 50%, I'm closing because, like, you know, at any sign of breaking the low, I'm closing 50%. Because remember this, the trend. The trend is where price makes a higher high and a higher low. And if this higher low is broken, there's a probability price can continue to push down. So why would you even want to hold a trade where there's even a little bit of a probability price now may go against you when you have a confirmation, when price is breaking the low? You know, in the same way, if you look at potential, let's say, sells, you got a candle coming down like this, right? You got another candle that goes down at this point right over here. And the next candle starts to break the high of the previous candle, hasn't closed yet, only breaking the high, I'm closing 50%. 100% I'm closing 50%. So now you got to ask yourself this question. Next time when you're in a buy or you're in a sell, for example, let's say you're in a buy, right? Next time, let's say you're in a buy trade and on the 30-minute time frame, and you see the 15-minute candle closing against you. Now, some people may ask, oh, what if the candle closes, you know, you're in a buy or whatever, and let's say this is the buy, and let's say the next candle closes, you know, with a small body. What are you going to do at this point? If it closes with a small body, I'm going to close less percentage. If it closes with a bigger body, I'm going to close 50%. You get the idea? But this whole concept of I'm going to close 20, 25 based on the size of the body of the candle that's closing against me, this is something you learn with time, with experience. The more you see these things happen, the more confident you get, you know, and the more kind of like different conditions you place on trades, whether they're moving or not. So this will come with time, this will come with experience. The more mature you get with managing risk, the more mature you get with trying to lose less every time, you'll get better with time. So don't focus on, oh, the candle closed with a small body and the candle closed with a bigger body. As long as the candle is closing against you, you're looking to see if you can close 50%. You know, and then if we want to go in like a little bit more advanced topics, advanced topic could be, you know, like for example, the candle has closed like this. Should I close 50% or not? You know, because it's still respecting the lows right over here. So this is something that we're going to talk about in another module later on. So then you get the opportunity to say that, okay, like, you know, maybe if we can respect this low, the next candle can break the high and continue to push up, and this comes into our impulse entries, you know. So everything is tied around price action. Even if you're managing risk, there's a way you can add risk back to the trade as well. So anyway, for this very simplicity, we want to focus on how to lose less at the first sign of candles closing against you. Hope this helps put this into practice. The last thing we talk about is a little bit advanced, which is something like, you know, some of you guys may already know this, but most of you who are new, with time as you go along into the markets, as you look at more price action, as you do more analysis, and most importantly, the more auditing you do of the trades you take, which you lose, the more you're going to start to understand how to better control your risk and how to better lose less than what you wanted to lose in the beginning. So hope this helps. Take care. We'll see you in the next module.